Professional English for market color, flow-driven insights. Welcome. Today we're breaking down market color, a brief, client-facing snapshot that tells you what actually happened in the market. Think of it as a fast, credible read on flows, not a long report. Good color blends hard data, prices, volumes, levels, with trader sentiment, who was active and how they behaved. The focus is sharp. What moved, who transacted by participant type, and why it mattered for price. In a few sentences, market color turns noise into signal, so busy professionals can react quickly and communicate confidently with clients and teams. Strong color starts with order flow. Anchor claims in actual trades. We saw steady bids. Blocks went through at 1.0850. Offers reloaded into the close. Identify participant types, not names. Real money, fast money, corporates, dealers. That protects relationships while adding precision. Always link flows to price action and levels. If buyers lifted offers into 1.0900 and stops triggered above, explain how that pushed the brake. When readers see the chain, flow right pointing arrow, level right pointing arrow move, your commentary earns trust and becomes actionable. Use a clean structure. First, lead with the headline move, USD sold off into the close. Next, detail flows, participants, size, and timing. Who was active, approximate clips or notional, and when the pressure built, London fix, New York open, or Asia handover. Include levels tested or broken. Finally, close with a balanced implication and risks. What the flows suggest if they persist, and what could invalidate the read. Event risk, thin liquidity, or positioning shifts. This rhythm keeps the note tight, factual, and decision-ready. Use measured language to protect credibility. Hedges like "we observed," "appeared," "likely," or "we think" signal humility and uncertainty. Quantify where possible. USD 200 to 300 meters. Clips of 25 to 50 meters. Low two-way interest, or decent topside supply. Avoid rumors. If something isn't confirmed, label it unconfirmed color or market chatter. This framing lets clients calibrate confidence levels. Be specific without overclaiming. Tie statements to prints or repeated behavior and separate facts from inference clearly. Adopt concise flow language. Two-way interest means both bids and offers are active. Topside points to higher levels. Bids are buy interest. Offers are sell interest. Distinguish participants. Real money. Asset managers, pensions. Fast money. Hedge funds, tactical, corporates. Hedging or conversions. Use curve terms. Front end, short maturities, versus long end, long maturities. Size shorthand helps. Clips. Standard trade chunks. Chunky. Large. Light. Small. This lexicon compresses complex action into clear, shared vocabulary. Begin with prints, exact prices, volumes, and key levels traded. Then add context, catalysts like data releases, central bank remarks, rebalancing, or time-of-day effects such as the London fix or futures roll. Finally, explain the mechanism, how the flow produced the move. For example, fast money sold into 1.0830. Stops below 1.0820 accelerated. Real money buying paused, deepening the slide. Data tells us what happened. Mechanism tells us why and whether the move can persist or fade. Turn flows into a simple map. Link activity to supports/resistances. Where bids absorbed selling. Where offers reloaded. Note positioning. Crowded longs can amplify downside on a miss. Clean positioning means moves may need fresh catalysts. Flag liquidity pockets, areas with resting depth, and air gaps, thin zones where price can jump. These mini-models help anticipate paths. Above 1.0900, air to 1.0950. Below 1.0830, sparse bids until 1.0800. Clients value this forward-looking, level-driven framing. Example: EUR/USD squeezed on RM bids post-CPI. Headline: EUR/USD up after softer CPI. Flow: real money bids absorbed, offers 1.0850 to 70. Stops ran above 1.0900. Fast money flipped to chase. Impact: price tested 1.0935 with light two-way into the close. Risk: follow-through depends on payrolls and whether RM demand persists. Template: headline right-pointing arrow. Flow right-pointing arrow. Impact right-pointing arrow. Risk: keep it factual, scoped, and attributable to flows and levels. If uncertain, say so. That's market color clients can use immediately.